Hi, welcome. My name is Orumé Hays. Today, I want to talk to you about the 20% QBI Qualified Business Deduction. Okay, so this is a deduction that is eligible, that has been given to small business owners by the Tax Job and Cuts Act. This deduction, if you are a partnership, if you own an S Corp, if you're a sole proprietor, certain trusts and estates, if you meet the requirements, you would qualify for this 20% deduction. First of all, though, as a sole proprietor, you have to be engaged in a trade or a business, or as any of these other business entities, you have to be engaged in a trade or business. What is a trade or business? You have to be involved in an activity for profit. It has to be done with regularity. So if you have a hobby, you would not qualify for this deduction. If you are an employee and you are driving Uber on the side, that's a side gig, that's a hobby, that's something that brings you extra money on the side. It's not a business, so you would not qualify for this 20% deduction. But if you have a mom and pop shop, you have a dry cleaning business, you have a beauty salon, you would qualify for this 20% deduction. Now, this deduction has certain requirements that you have to meet, and there's also certain income limitation. If you fall into a category that's called a specified trade or business, your ability to take up to 20% of this deduction is limited. So what is a specified trade or business? So this is an activity in which the principal activity or the principal trade or business is based on the reputation of a skilled person or one or more of the principal employees of the business. So these are fields like health, law, financial services, and athlete, performing arts, performance acts, brokerage services, and investment services. Those activities, the ability to take the 20% is limited. Now, there is a threshold. There are 3 different thresholds that you need to be aware of if you want to try and take this deduction. So depending on how well your business is doing, of course we want your business to be really profitable so you can you can maximize your deduction. If you are a single filer for this year, 2019, if you make below $160,000, you can take 20% off the top of your earnings. You can take 20%, no questions asked. So if for every dollar, look at it this way, for every dollar that you make, you're only going to pay tax on 80 cents. Okay, so that's your 20% deduction. Now, if you're a joint filer, and together as a joint filer, you earn over the business earns over $321,400. Below that amount, you can take up to that 20%. If you if you make more than that, then your ability to take that 20% begins to be phased out. Depending on the calculation that we do, it's best that you hire a certified public accountant to help you with this calculation. You can get anywhere from 1 to 19% basically. And if you are over, for a single filer, $210,000, or for a married couple, $421,000, you are completely phased out of this deduction. That is, again, if you are in a specified trade or business. Now, there is another calculation that goes into this deduction, calculating the deduction, and this is all based on a wage and capital assets limitation. But this is something that you want to look into with your certified public accountant. The key thing is that you need to know, as a small business owner, you need to be aware that you are entitled to an additional 20% deduction. So as you get ready to prepare your taxes for 2019, which is going to be done in 2020, make sure you ask your tax preparer about the QBI 20% deduction. Thanks for stopping by.